What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we are going to be checking out AMD stock because the stock is now down 5% today, as lowered their price target from $180 down to $155. And keep in mind, the stock is 130 right now. So the reasoning behind this is that they are expecting AI chip competition and a weakening. So these are all just yet. But it says AMD's pipeline remains at least 1 year behind NVIDIA's and is lacking a competitive network. So he says longer term, we continue to see NVIDIA at 80% plus accelerator shared by AMD in a range of startups, right? So again, it's not really terrible news. And he said also there's a possible PC market correction in the first half of next year. But then they also threw in there that AMD could possibly benefit from the struggles at Intel. So now there's good news, I guess, to go with this article. And he lowered his price target to one. Oh, I'm sorry. I don't know why it said, wait a second. Oh, he cut his price fee. Then why does it say here that he lowered his price target? Oh, this was a different analyst. Okay, this is a different analyst, lowered it to 180 from 185. So the bottom line is both price targets are still trading above where it is today, right? So the way I kind of look at this is like, well, first off, you never want to really pay too much attention to what these analysts put out there in terms of stock price predictions. If they're bringing up actual concepts and actual theories and ideas, that's a different story. It's definitely something to pay attention to. But in terms of them being accurate with price predictions, they are typically really bad at it. So that is the last thing that you want to concern yourself with. But again, they'll look at this, though. You always have to ask yourself, even if there is some bad news that is possible, how likely is it, and how much of an effect is it going to reward profile? Like, what's the chance the stock goes down more, and how much upside does the stock have? In my opinion, I mean, I guess if things got really worse, maybe the stock goes down to $90 or $100, like worst case scenario. But I mean, how likely is that? I would say not nearly as likely as the stock is trading at, $150 or $180 plus, right? I think there's a much better chance that the stock's going to go up than down, in my opinion. And we could justify this because, okay, let's look at, so sure, the last couple of years, they've been struggling with net income, right? The numbers have gone down. But if you look at the last 5 quarters, they've improved, right? They were losing money Q3 of 2023. And look at with every quarter here, we see the numbers getting better. And now the last 12 months, they're up to $1.8 billion in net income. Then we also can pay attention to that here's another way I like to look at things. The last 5 years on average, we're looking at average 20% growth per year for revenue, right? So you can justify a more compressed valuation. Like let's say the PE ratio is normally, if we check the chart here, you can justify it by saying, okay, if they're going to grow at a slower pace than what they were doing, then sure, maybe the valuation is going to come down. But in this case, they're not, because if they're averaging 27%, 28% growth, that's what they're expected to do next year anyways. 27% might slow and that might hurt their numbers. That's a possibility, but I mean, that's just speculating. There's no guarantee of that. And I mean, by what degree is that going to hurt? Is it going to, are their numbers going to go down a couple percent? Is it going to be, they're going to miss numbers by 5%? Then it's not a big deal. So you have to look at it from that perspective. But what is estimated here, the numbers are looking strong. $3.3 EPS to 5.1 next year, and then 27% revenue growth. So there shouldn't be anything different. I mean, those numbers are strong. Those numbers, the valuation should be trading higher. And I mean, you look at the last couple of years, the lowest PE ratio was a 31, right? Most of the time, the stock's trading at 100 times. You see? So if we're taking 31 times, and if we look at the more previous, we can even look here. I mean, it skyrockets to these insane valuations, but when it comes back down to a more realistic number, I mean, look, it was even trading at above 200 times. And then now we're sitting at 126 times earnings because people are expecting, because their earnings were down so much and they're expecting to come back up. But still, that's why when you look at back in the last couple of years, you can see that the numbers really are, 31 to like a 35 is like, that's an easy value. That's being very conservative. So I mean, if you take 35 times next year's earnings, it's $180 stock. And that's very conservative. That's very conservative considering that's the bottom pretty much. I mean, for this stock to trade at 55 times is not out of the question at all. So in that case, the stock could be $280 next year. If we have a decent sentiment in the stock and in the market, this stock can be double where it is in a year, not in a year from now, but in 2025, in less than a year. So, but I say base case is 100 and let's see, like 160 times. I see the real. I think $160 a share is a realistic bottom for the stock. Like I don't know. That's what the numbers are showing. Their growth is not expected to be weak, and the earnings are expected to go up. There's no reason the valuation should be trading at under 30 times earnings. So that's the way I'm looking at this. I don't see a lot of issue there. I mean, the analyst that is dropping the price targets, like it's just speculation. There's no proof. And I mean, they're probably doing that just to get the stock price down so they could buy it, to be honest. So I'm interested in buying this. I don't know if I'm going to buy up, 20 or 30 shares right now today, but in the next couple of days, I'm going to be watching it, and the more the stock goes down, then the more interested I am. But I might start a position here soon. I might start a small position here soon, and then if the stock goes down to 110 or something, well then yeah, I'll buy a lot more shares. But that's the way I'm looking at this. So that is my analysis for AMD. Let me know what you guys think down below, and I will see you in the next video.